and some earnings now, and the big one from last evening was IndusInd Bank, and after the loss that it reported in the fourth quarter, all eyes were whether the lender reports profitability or not. Gaurav is joining in with a review of the numbers. Gaurav, good morning. How were the numbers for IndusInd Bank?
Well, as even for IndusInd Bank, we could say it was lacking some positive triggers. So let's take through the numbers first. Net interest income declined by 14%. When it comes to net interest margin, we saw a little bit of good number of around 3.46% because Street was expecting around 3.2% net interest margins on a normalized basis. There was an impact of 11 basis points. It was positive impact, but that was a one-off impact. But even if we exclude that, NIMs were a little bit higher. When it comes to operating profit, that declined almost by 35%, a little better than what the street was expecting. And at the same time, when we look at the core fee income, now that has gone down almost by 35%. That is a bit of a concern. Credit cost, again, it was a little elevated, but at the same time, it has declined almost by 75 basis points. Slippages, they have remained elevated, and companies saying that MFI slippages specifically are elevated and they are likely to ease off in third and fourth quarter. Other than that, profit declined almost by 72% on a year-on-year basis, a little lower than what the street is expecting. Now, what bank is saying is that they have around 48,000 crores of surplus liquidity, and that is going to help the bank. Other than that, they are also saying that the OPEX is likely to grow at a slower pace. But what remains actually a negative is that there were no triggers for the ROAs going ahead. What is happening is that the entire the OPEX actually is likely to come down, but at the same time fee income is also likely to come down. Other than that, the management commentary did not suggest any kind of boost coming up in the profitability, although they are saying that they are going to remain profitable, but brokerages do not seem to be very much bullish about it. In fact, all the brokerages, they have not changed any kind of guidance or any kind of the target price. We have got JP Morgan, who has underweight trading with a 550 rupees target. What they're saying is that PPOP is likely to remain subdued at least for the next 3 years. So definitely that is one of the concern that brokerages have right now. So in terms of number, we were expecting weak set of numbers and bank has delivered fairly well, but in terms of the outlook, we are still not sure how the bank is going to do in the next few quarters.
Keep an eye out on IndusInd Bank. Gaurav, thank you for that update. In fact, let's listen in to what the lender's chairman Sunil Mehta had to say during the analyst conference call last evening.
During Q1, the board and the management have spent considerable time and effort towards resolving the concerns relating to legacy, treasury and microfinance issues as identified in the previous quarter. The financial impact of the legacy issue is thus now behind us.
Keep an eye out on IndusInd Bank today. The stock, though, has recovered significantly from its 52-week low.